If you're looking to buy a house for yourself, you typically opt for a mortgage loan to help you with the payment. But in certain cases, a personal loan may be an option. Let's take a look. In most cases, it's not a wise decision to take out a personal loan to buy a house. Personal or short-term loans typically have much shorter repayment terms or plans, and they charge a much higher interest rate than mortgage loans. If you're looking to buy a big or even a standard-sized family home, then a mortgage loan will probably be your best bet. However, if you're looking to buy a tiny house, an apartment, or even a mobile home, then you may want to look into the possibility of a short-term loan rather than a mortgage loan. In fact, you may even find that you're having trouble finding a lender who's going to give you a mortgage loan to buy a tiny apartment or mobile home. In cases such as these, borrowing money using a personal loan may be a prudent solution. But keep in mind that personal loans can either be secured or unsecured. If it's an unsecured loan, then it's more than likely going to have a higher interest rate. Secured loans typically have lower interest rates. So, if you want to get a secured personal loan, then you'll probably have to offer up an initial cash deposit as your collateral. If you're considering using a personal loan to pay for the initial deposit or down payment on the mortgage, keep in mind that your mortgage lender may not allow this. When mortgage lenders are assessing whether or not to approve your mortgage loan, they calculate something which is known as your debt to income ratio. It's called DTI for short. Now, this is a comparison of how much debt you have compared to how much you earn. Your DTI ratio needs to be below a certain threshold for your mortgage application to be approved. Taking out a personal loan for the down payment will result in your DTI ratio increasing by a significant amount. This may cause the mortgage lender to reject your application even if they had initially approved it. It is technically possible to pay your house deposit on a credit card, but most mortgage lenders require that at least 5% of the deposit comes from savings. Finding a lender that accepts unsecured finance as a full deposit is very difficult, and opting for this method will significantly limit your mortgage options. If you're already a homeowner and you're looking to sell your current house to buy a new one, you may want to look into bridging loans. A bridging loan is a short-term loan that you can use to fund the purchase of a new property for yourself. If you've sold your current house but you don't have enough money to buy a new one, then this loan is used to bridge the gap so that you can buy the new property for yourself. As you can probably imagine, bridging loans don't offer as high an amount of money as a mortgage would. Another thing to think about when considering bridging loans is the fact that they do have quite high interest rates. It's common for bridging loans to have an interest rate as high as 18%. Taking out a personal loan to buy a house is technically possible, but it's generally not a wise financial decision due to high interest rates and short repayment terms. It's usually better to opt for a mortgage loan when buying a standard size family home. However, in some cases, a personal loan or a bridging loan may be a good option, like when you're buying a tiny house or apartment, or when you need to bridge the gap between selling your old property and buying a new one. Remember to do your research and also weigh up the pros and the cons of each option before making any decision, and always make sure that you can comfortably afford the repayments before taking out any loan. If you're interested in finding a loan for your circumstances, simply click the link below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it'll give you access to quotes from around the UK tailored to your circumstance. It's totally free to do and, of course, won't affect your credit score. Click the link below and fill out the short form to try it out.